Welcome to a Cofi with the FinTech Pod. We'll explore the latest trends, innovations, and ideas shaping the financial industry. Join host Alex Irigoyen as he interviews leading experts in the field. Learn from top CFO, tech leaders, investors, and many more. Join us and get inspired. Let's get started.
Hi everybody, and welcome to a new episode of A Coffee With. Today with us we have Heather Endresen, Sponsor Finance Director at Live Oak Bank. Thank you very much, Heather, for joining us today.
Thank you for having me.
How is the week going so far? It's been an intense week in the banking sector.
It has calmed down a little bit from a few weeks ago, but it was a very good and productive week.
Awesome.
Overall.
Perfect. Great. So thanks again very much for joining us. I know you have a very tight schedule, so taking some minutes to join us in the post is much appreciated. Your career, it's been very, very large in terms of working in the bank industry. From the very beginning, you started working in different banks. So I don't know if you could share with us what this journey has been, pretty much from the beginning to these days at Live Oak Bank.
So I've been in banking for about 34 years, believe it or not, and I started in a very small bank. I jumped right into managing SBA lending departments very early, and managed and started up many of them for small and large banks, small, regional, and large. I ended up at Citibank at one time managing SBA. So today, and for the last 6 years, I am a co-director of sponsor finance search fund lending at Live Oak Bank. So this is a smaller bank, but one that is very focused on small business lending in particular and uses the SBA program very, very well.
Awesome. Super interesting. So I have to make you, of course, the question, how do you see during these days the banking industry, and especially right in those banks that are not as big?
Yeah, so certainly the Silicon Valley Bank failure certainly changed things quite a bit. I think the fact that there were depositors at risk of losing funds for the first time in a long time, and the fact that it went so widely broadcast on social media so quickly. That was really the first time that a bank run took place in the age of social media from everything that I know. And so I think it definitely changed things. I think it opened up the depositors' eyes to the risk of maintaining deposits above the FDIC limits. Mm-hmm. And there are a lot of solutions that I think can sort of respond to that risk. But I think the main issue for smaller banks is that the public at large is now kind of keenly aware and maybe not all that well informed mm-hmm. about the risk. They just know there is a risk now where they really didn't think about it maybe so much before.
Yeah. So I wanted to ask you about this later in the episode, but now that you brought it to the conversation, what do you think is the impact of social media? Is it making the world less stable? Because we see many stocks going crazy up, right? Or maybe some other assets moving a lot from one day to the other just by the impact that they have in social media. Do you think is it changing how stable the banking and the finance industry in general is?
Definitely. I think I'm a believer in mimetic theory, and that human beings sort of follow each other, and it's sort of something we really can't control. And I believe social media absolutely amplifies that in a way that we've never had before. So things move much quicker, and that negatively impacts the stability of financial markets. If you're going to have wild and rapid swings in anything financial, whether it be a deposit run or anything else. So I think it certainly has been a game changer, and I think that a lot of financial institutions and, just the industry at large needs to get better at their messaging, and get better at using social media, being on there with everybody, and trying to get the right messages out. I think the old age of public relations, many of those tools don't work very well in this environment.
So related with this, what are like the trends that you see in the banking industry for SMBs, right? The social context is changing a lot, the technology as well. How do you see that the banking of the SMBs is going to change in the future?
Well, I'm very focused in my work on acquisitions of small businesses. So I can really speak more to that piece of it. I think that, we have an enormous number of founders of small companies who are reaching retirement age, would like to retire, and would need to monetize their business in order to achieve their retirement goals. So I think what is very interesting is that the SBA program is functioning very well. Mm-hmm. It is allowing for liquidity for those exits to actually occur. They've actually even come out with some new rules. The official rule isn't yet published, but they've signaled that they're going to ease up on one of the rules, which effectively will allow some rollover equity in certain circumstances, so that'll make it even easier to structure certain types of transactions. So I think the good news is it remains a fairly liquid market for these small business exits and for new entrepreneurs to become entrepreneurs through acquisition rather than through startup. So I think those are really positive signs. Nonetheless, we're in difficult economic times, and therefore credit tends to tighten up. So I do think it will still be a little bit more difficult for people to structure deals that are approvable by banks. But I think social media actually helps people learn very, very quickly what works, what doesn't. And it kind of makes that market, it allows it to remain fairly liquid and somewhat efficient. So I think in some sense, social media has really helped in that regard.
Yeah, you just mentioned that the current situation, of course, it's not the best right now. We've seen, even though the inflation rates dropping below 5%, which is the lowest that it's been from 2021, I believe. How do you feel about the interest rates? Do you think that the Fed is going to stop raising them, or how do you think this is going to take for a longer time?
I was really surprised that the Fed did the last increase right on the heels of the bank failures. But I think they're about done. I really do. I think that maybe we get one more and then that's it, levels off and maybe starts to come down depending on how the economy responds. I think inflation, however, is here to stay at higher levels than we have been used to. I think that will be a function of deglobalization, unless, that's the main driver, I believe. And also a tight labor market, which also drives up, wages, and leads to more inflation. So I think inflation is still something that we're gonna have for a long period of time.
Perfect. But do you see that for small and medium-sized companies, the worst has arrived to an end, and it's going to be for the coming months or coming years a better situation?
I don't think it's the worst yet, no. I think that we're right now at the sort of beginning of where small companies that have leverage, that have debt, are beginning to have some stress under that debt and may be headed towards defaulting. And what you're seeing in a lot of bank earnings, across the board are more charge-offs and more loan loss reserves. They're seeing the problems and they're reserving for those potential losses. So I think, for me at least, the way I look at it, the worst hits when the peak of the credit losses hits, and I don't think we're there yet.
Perfect. So that could be still a process of multiple years, maybe.
I wouldn't say that. I would say probably over the next 18 months, that's my guess, that we'll probably hit the peak of credit defaults for small companies. And then, again, probably level off and come down depending on, if the circumstances remain fairly stable to what they are right now.
Awesome. So for those entrepreneurs, business owners of small and medium enterprise firms, what are the things that they should be in terms of finance looking right now to be prepared for these coming months?
How do they prepare to get financing? Really simple things like having clean accounting practices. Some of the biggest challenges are simply that, trying to sort of unwind accounting practices that are not correct or not clean, and being realistic really with their expectations. I think especially in the small business acquisition market, there's always a lag when credit conditions change. The sellers of those businesses don't seem to quite yet have accepted that. And accepted that the buyers of their businesses are going to have a harder time getting debt, and therefore, if they want to get a transaction done, they might have to provide a larger seller note with better terms or adjust their price a little bit. So I think there's a little bit of a lag right now where sellers would like it to be the way it was maybe 12 months ago and haven't quite accepted that things have changed.
Yeah. So do you see now then a larger amount of transactions going on? Is it easier to buy and sell firms in economic situations like the current one comparing to the ones of previous 1 year or previous two years?
I think it's more difficult right now because, again, credit has tightened, and anytime that liquidity tightens up, now it's made it more difficult to do transactions. But I also like to think bigger picture. Since I have been in banking as long as I have, I like to bring that perspective in for folks who are sort of newer to the SMB acquisition market. Maybe a lot of them don't realize that 10 years ago even, there was very little liquidity. It was very few banks understood or were interested, had the credit appetite to do much in the way of uncollateralized leveraged buyouts of small companies, even with SBA. So yeah. I think the fact that there's so many more banks that are doing it today, that liquidity is so much stronger, that's really changed and for the positive over the last decade. And also service providers and sophistication. There 5 years ago, there were no quality of earnings providers for small deals, or their price point was just too high. They were serving middle market and above, and there was no one serving the small market, and so people had to do their own diligence, and that there was some peril in that. And now you have 5 to 10 very good vendors that are really great forensic accountants that can help de-risk deals and make things safer to keep that liquidity flowing. So I think long term it's just been very, very positive. We're in a short term kind of tightened credit situation. Again, I think that's probably lasts for another 18 to 24 months. Mm-hmm. That's my optimistic view anyway.
Awesome. So what do you think, Heather, in terms of the technology in this last year, does it help to increase the volume of transactions that you can do in small businesses? I assume that before it could be probably a very manual process. Are you leveraging technology in some way to help you do these transactions, these acquisitions?
Well, it's a good question. Banks aren't historically very good at adapting and bringing in new technology quickly. So I wouldn't say that I see any great change for the banks, but I do think there is something interesting that may happen, and that is with these new rule changes that the SBA has put out, they are going to allow fintechs or other non-banks to begin applying for a non-bank lending license for the first time in 40 years. There have been 13 of those licenses in existence, where if you wanted to be a non-bank lender, you had to buy one of those. And so it was very limited. So now they're going to open that up. So the question, I think, and it will be very interesting to see how it plays out, will some fintechs come in and embrace technology that can serve small businesses more quickly? And will they find some really interesting niches that they can serve that maybe the banks have overlooked? So I think that's probably our best bet to see technology really change things.
Perfect. Perfect. Also, one other things that I wanted to ask you for, it's the ethical implications, right? It's a topic that it's last year's very, very sound. So in the world of the transactions, does it impact as well? So are there any specific industries that the banks don't want to cover in terms of these transactions?
Well, that changes from bank to bank and over time, and it basically comes out of experience. If banks are having problems in their portfolio and they're seeing that a particular industry has more problems than others, they're going to steer away from that. The nice thing is that their SBA data is public. It's publicly available. You can get the entire database from Freedom of Information Act, and not only banks but everyone else can sort of parse through that data and see which are the better performing industries and franchises. Once again, I don't think, even though that data is available, there are vendors outside of banks who do a great job with that data, but within the banks themselves, I haven't seen them all using the data very well. Banks tend to be a little more old-fashioned and go kind of on anecdotal. So the credit folks in the bank might see that landscaping businesses are having more trouble than others, and they're going to start steering clear of those landscaping industries. So it's a fluid kind of situation, and it's different from bank to bank. One bank may dislike e-commerce because they've had bad experience, and another bank will be embracing it because they feel they know how to evaluate those companies better and how to take risk there. So it's always good to kind of talk to different banks based on the industry that you're working with.
Yeah, I was previously reading an article about the real estate assets in Europe, commercial assets of real estate. There's having some problems in there. I don't know what your thoughts about that, if that can move as well to the US.
Well, there's certainly talk for the larger banks that have quite a bit of credit out on office real estate, that there's going to be some pretty difficult challenges there. So I think that's probably true. There's no denying that office space vacancy is way up, and that's probably somewhat of a permanent change in the way we do things. I think when you look at smaller banks and small business lending, industrial and the kind of strip mall type retail, that tends to still do just fine. I think it's wrong to lump commercial real estate together under one umbrella and kind of let that headline sort of color people's thinking in terms of all commercial real estate. I think it's really sort of the Class A office that is really probably the most challenged asset for banks now.
Awesome. That makes total sense. Also, I wanted to ask you about the cybersecurity. So there's definitely been a hot topic in the last couple of years. We've seen multiple attacks to different entities, to different organizations. How are banks preparing for all this? Because at the end, it's like they have the money, right? It's super important for them. So how do you think they preparing?
Well, I'm not an expert in cybersecurity, so I'll start with that. But I think banks have taken that very seriously for a very long time and spend a lot of their budgets on ensuring that our systems are as safe as they possibly can be, and that we're on top of anything new that's developing in that space. So I think the banks take it very, very seriously and are doing everything, kind of right that they can be doing at this point.
Mm-hmm. So should we keep the money in the banks? How do you feel also about cryptos? Is it a way to have our deposits, some savings in there too?
Well, I have strong opinions on crypto that I argue with my young adult children about sometimes. I see it this way. Part of our money supply is based on the money multiplier effect. And that is where you put money into a bank, and the bank only keeps some of that on reserve and lends the rest of it out, and then so on and so on. And they say, the money multiplier effect is 12 times. If you put $100 into a bank and each bank lends it out, that $100 has turned into 12 times that amount. So that's important. That creates that's money supply. That creates liquidity. That's important to the overall economy. And I think that's the one thing that crypto hasn't solved. I looked at the FTX situation, and everyone was sort of shocked that the crypto bank was investing the money. Well, that's what banks do. You can't make money just charging fees on keeping people's deposits and not doing something with it. So in our U.S. banking system and in Europe, we take the deposits and we lend, or we invest in very low risk securities. A crypto bank would have to do the same thing. So then I say, well, if it's going to really be the same thing, I'm not sure I know what the benefits really are. I mean, I'm sure there are some. There's differences, so there's got to be some trade-offs. But until crypto can really figure out lending, I don't think it can replace our currency system.
Yeah, awesome. That's super interesting. You have then some divided opinions at home between the
yes,
team.
The young folks. I don't have any problem with crypto, and I think blockchain is really, really interesting, and it has a lot of other applications. But again, I'm a banker, and I understand lending, and I don't see how crypto has kind of figured that part out yet.
Awesome, super interesting. So to finish, I wanted to ask you, for young people listening to us that they want to start a career in the banking industry, is there any advice or any tips that you would like to share with them?
Wow. Yes. I mean, I think it's been a great career for me. It's actually a lot more exciting maybe than some people give it credit for. I think it depends on what area of banking. There's just many different things that you can do within banking. But for me as a lender, it's given me a bird's eye view to how things work in the economy that you couldn't get in a library, you couldn't get in a school. It's really very practical understanding of things that I think most people just don't get that opportunity. So I think even for a young person, even if you just spent 5 years in a bank, being exposed to how things work, I think it would give you a huge advantage to anything else that you want to do, any other industry and business that you want to pursue after that, because you would learn, so much.
Awesome. Heather, thank you very much for joining us today. It's been super interesting, all the information you have shared with us. I much appreciate having you in the podcast.
Thank you, Alex. I appreciate it.
Awesome. Have a great day. Bye-bye.
You too. Bye-bye.